Yo,
Hey,
welcome. Jennifer is here tonight, live at 5. I was completely caught off guard there. I was actually text messaging mid, when that popped up. But
exciting.
welcome, guys. Hey, Jennifer, how are you?
I'm good. I'm good. I was just checking in on TikTok. I don't know if are you tickety talking yet?
I'm out there. I watch it occasionally. It's easy to go down a rabbit hole. I'm
It
not
is.
creative to do it. I started about, I don't know, maybe 8 months ago, and I said I'm going to do this TikTok thing, and I grew it to like 2,000. Whatever it is, followers, subscribers in a short period of time. But then I just got out of it just took so much time to edit the video. And I don't know.
Oh,
And you could
were
say
you
that about YouTube,
dancing?
but what
Please
now?
say you were dancing.
No dancing. No dancing. So many of you guys probably know Jennifer, fellow mortgage advisor. Normally we have Josh on here. Josh is out due to surgery, getting a shoulder replacement. So we have another mortgage pro here answering your questions. Jennifer is also a YouTuber. Many of you guys know that. I have asked her to be on here. So she's here. She's TikToking. She might be on Instagram. All of her contact information is in the description below if you want to check her out. But we appreciate you being here and joining us. So had a little bit of news over the last couple of days, right? Rates have improved, which has been one of the key things that a lot of people have been watching. We had rates kind of rise into the Fed meeting last Wednesday. With the worry that the Fed wasn't going to follow through on tapering the purchase of mortgage-backed securities and bonds and all that good stuff. They followed through, said did what they said they were going to do. Rates didn't really move immediately, but since then rates have trended back down, which you can talk to us a little bit about that as we move along. But outside of that, not a lot happening.
No, so we saw a little bit of a tick up today. So we did see that drop after the Fed meeting, which was great. I was calling all my past clients being like, let's do it. Let's do it. This is your last chance before they start talking about inflation again. And then they started talking about inflation again. So we ticked up a little bit today, and we're going to keep on seeing that as we see them talk about inflation and, no, we're okay. So that's what I'm really watching right now as we progress into the new year, for sure.
Now, a lot of volatility in the market. I mean, whether you're buying a home, refinancing, whatever it is, you're doing, there's a lot of volatility, right? I mean, one word out there with regards to inflation or, anything related to housing, Zillow coming out and doing saying what they, the market shakes up, right? I mean, the headline, nobody goes beyond the headline. Unfortunately, everybody just reads the headline, gets all worried, and,
clickbait.
Clickbait. Exactly. And so as I normally do, let's talk a little bit about inventory here locally, right? I mean, a lot of people want to talk about the number of homes coming on the market, increasing, so on and so forth. I update you guys every week on my market here in Orange County, 3.3 million people. Our inventory as of today was 1,731 homes. So 1,731 homes on the market. That's the least amount of property I've seen on the market since spring. In fact, I don't even know if I saw a number below that because I wasn't following it that closely. I didn't really start to pay a lot of attention to it until people started talking about, well, inventory is increasing. So I continued to watch it. Every week I update you guys. Here in Huntington, we have 111 active properties on the market, a town of 200,000 plus people, 111 active homes. That's condos, townhomes, and single family homes. There's no property to choose from, guys. It's stupid. And it's only going to get worse as we move through the end of the year. So what are you seeing in your market? I know you don't deal with real estate per se, but I know you were out there looking for yourself for 1031 at some period of time.
Yeah.
And I follow you on Instagram and see that you're out maybe house shopping. I'm not sure what's going on there. So enlighten us.
I posted some really good pictures on Zillow recently of what some agents are posting. That's just crazy. Look, so I'm licensed in 48 states, so I do loans across the country, and it's really similar. And I'm seeing the same thing as an investor looking for something to put my money in. It's the song of low inventory. I haven't hit any markets that I want to invest in that have a plethora of available houses for sale. And so, for all the doomsdayers that are constantly saying the market's going to crash, I don't see how that's possible because there's no flipping houses for sale to begin with to a large extent.
No,
so that's
agreed.
what I've been seeing. And I've been
No,
looking in 5 states.
wow. Yeah, no, it's done. I mean, it's crazy. Like, I mean, the
Mhm.
last 3 offers I've put in, I mean, if we want to talk about it, in fact, 2 offers, properties I called on today for 2 different clients. One had 27 offers. The other one had 17. Over the weekend, I showed a property that was off market for a buyer of mine who's cash up to $1.5 million. This property was priced at $1.2 million. And we walked in, and it's off market. I thought I was the only one showing up to see it. And there were 4 other agents there. We wrote an offer later that day for $1.25 million cash, 7-day contingencies, 10-day close. So pretty typical of a cash offer.
Yeah. Did it go for
Um,
1.4?
no, it didn't go for 1.4, but we didn't get our offer wasn't accepted. We were one of
Oh,
2 offers they were considering. They went with the other offer because it was higher than ours. My client wasn't in a hurry, so he said, "You know what? If I lose it, I lose it. This is what I'm willing to do," and it didn't work out. So
yeah.
that's the mentality you have to have in this market: is put your best foot forward. If it
Mhm.
works out, great. If it doesn't, you move on. But
Yeah.
what happens most of the time is there's regrets. There's, I would have done that had I known this, or so on and so forth. It's that song and dance. So until, supply increases, you're not going to see a lot of change. But
Yeah.
anyway, I mentioned Jennifer has a YouTube channel. Check it out. It's in the description. I'm sure our fabulous Jennifer Lego, who is one of our moderators here, will drop that link in the chat here momentarily for you guys if you want to check her out.
Hi,
So
Jen.
let's talk about rates. So let's talk about something other than crashes. I'm
Well,
trying to
okay, so
find some questions. Yep.
let's say one thing though. So with the whole housing, like the areas I'm looking at, they have short supply, very similar to Huntington Beach, because I've been targeting second home, higher end markets.
Right.
Okay. So I don't want everyone to be depressed and think they have no chance, because I am seeing pockets across the US where we're starting to see a little bit of a softening. So I do have buyers, in some states where it's not a tourist destination. I mean, Huntington Beach, like, everyone wants to live there. Of course, it's beautiful, but like there's some other areas that are more industrial where we are starting to see houses sitting for 7, 10, 14 days if they're mispriced. So there is hope. So I don't want everyone to despair, because I think it's really the more tourist or, where the Wall Street's investing where we're really seeing pain points.
No, agreed. I mean, the most important thing I heard out of that is real estate's local, right? I
Yeah.
preach it on videos. When I talk about the market, oftentimes I'm talking about my market because that's what I'm used to. That's what I deal with day in and day out. But fortunately, I have the ability to talk to other real estate agents across the country in major metropolitan areas that work, similar business I do. And these are conversations I'm having
Yeah.
because we do Zoom calls once a month, like mastermind stuff where, maybe we're talking about real estate, maybe we're not. But the question of real estate always comes up. Well, what's happening in your market? Are you seeing any changes? Because a lot of them know I do the YouTube thing and talk to people. And one thing I don't want to do is start talking that the market's doing something differently than what the majority of the markets are doing, because then I look like a dumbass, if you will, right? I'd rather kind of get an idea. And so oftentimes I'm not just talking about Huntington, I'm talking about other major markets out
Yeah.
there. But you
Sure.
could be in a market that is changing, right? I have seen a lot more offers get accepted over the last 6 weeks than I have previously. I mean, in talking
Mhm.
to, Josh, who is normally on this channel, his team, they do loans like Jennifer, and they're getting more offers accepted. That's the one thing they said. They said, "Hey, we feel like we're actually, more deals are going into escrow," because, and that to me is a sign of things changing a little bit, which is positive
Yes.
for the market in general. But so somebody asked what markets what investment what states you were looking in for investment properties, or what markets you were looking in, Jennifer.
Oh my gosh, so many guys. I was looking in Santa Fe, New Mexico, because I was looking more for something that was going to be, I thought it would have a good amount of appreciation. So I was thinking, where do people want a vacation? Where's the money going to go?
Mm-hmm.
And that's because I'm a terrible landlord. I hate it. I don't enjoy it. So I want it to be something where I can put a tenant in, close my eyes. I'm not going to be an Airbnb. So Santa Fe, Miami, because I fantasize about being an Airbnb and visiting. The local market where I am, which is Healdsburg, California. I was looking everywhere in Southern California with the fantasy that I could find something, by the water for less than $2 million, which is impossible. But those were the main areas, and then a bunch of different areas in Florida too. So
Gotcha. So I once owned a second home in Miami
how was
in a
that?
high rise. And it was what I learned from that experience is one, don't buy at the top of the market because I got hammered on that deal. It was purchased in 2004. I sold it for about a third of what I paid for it in
Ouch.
2009, 2010. But what I realized is as a second home, it was much cheaper to actually just go vacation there twice a
That's
month
true.
than it was to own that damn property with the
Yeah.
HOA fees that, the HOA was like $1,000 a month.
Yeah.
It just, it didn't, I had to rent a car every time I went out there. It's just
Oof.
financially, it made more sense just to go enjoy your trip out there, and instead of having to worry about, a property and all that good stuff. But
And that's what I'm hitting a lot of. Like, I keep on doing the math and I can't get that's the problem with being a lender. Being a lender, it's like you always end up refocusing yourself and you do the math and you're just like, oh, that's not going to work. 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 So we'll see. I might not buy.
no, and that's okay too, right? Unless it's a 1031 and then you gotta
Well,
pay
I'm a bad
taxes. So
landlord. So, I mean, you have to want to be a landlord to buy a bunch of rental properties. That's my
no,
theory.
absolutely. So we don't really have a lot of questions coming in at the moment. So let's do this. You're coming in from an investment standpoint.
Yeah.
When you think of investing, right? What do you think of, right? So there's typically a cash flow perspective, and then
Mhm.
there's a market appreciation perspective. Looking in California, you would
Yeah.
look more typically towards a market appreciation standpoint, but areas like Santa Fe, New Mexico, I don't know. Are you getting the appreciation along with cash flow? What's
Six.
important to you when you're
Yeah.
thinking about an investment property, or what should
Well,
someone think about?
yeah. So, I mean, it depends. You've got to think about who you are as a person, and that's what this whole thing's brought to me. Because I love the concept of having a bunch of Airbnbs. I've seen so many clients be successful with that. But I have a full time job where I can't. The concept of it just freaks me out. I can't even handle the work. So, no Airbnbs. The other thing is there's a lot of people that have rentals, and there's some people that are going after Section 8, which is really interesting, and I see clients be successful with that as well. Once again, from my angle, feels too like everything where I have to deal with a tenant feels too risky. So I was looking for appreciation, which is how I've done well in California before. But there is a good chance I'm going to be holding off because I have a place in New York where it was an appreciation gain. We're not seeing the appreciation. And we recently had a tenant where the place had never had, it's perfect. And now we have mice. So I'm dealing with $10,000 of mice. So I'm a little burnt right now on the investor being an investor.
No, understood. I mean,
But
it's
I have so
again,
many clients that do well
it's
with
something you
it.
mentioned, it's not for everyone. And
Mhm.
last week we talked about, the Airbnb, right? I mean, everybody wants to do the house hacking thing now, right?
Oh
Hacking
my
is
gosh.
this new word that's come up in the last 5 years or so with
Mhm.
regards to making things easier, simpler, what have you, or faster money or whatnot. And the Airbnb, the short-term rental deal is big talk. And Josh, as he mentioned last week, has a property in Rancho Mirage, down in the desert. And they came out about a month ago, he said, and they said, no more short-term rentals. So if
Yeah.
you went in with the idea that you bought a property, maybe it was you were paying more for it, it didn't cash flow, but you were paying, that top dollar with the idea that you were going to rent it out, and then they eliminate that, you're screwed. I mean, to
Yeah.
some extent, right? I mean, you have to come up with another plan. And so all of that needs to be factored in when you're thinking investing and the direction you want to go with, where you put your money, in
And
real
that's
estate.
happening in a lot of markets, not to cut you off, but when I
No.
originally started looking at Santa Fe, that was my plan was that I could do Airbnbs, but they've actually put in rules recently where, if there's someone within a specific distance of the house and it's like your neighbor, if they have an Airbnb, you can't. So there's so many towns across the country where they're putting in rules that are making it really difficult. And that is a big fear because, we did see that down in Southern California.
No, absolutely. So questions. What I'm not going to put you on the spot with where you think the market's going and all that good stuff, because it's, no, we don't know. But if somebody asks you, they come to you, and because we get the question all the time, they're considering buying a property.
Mhm.
What is your conversation with them to see if they're, I don't know if they're ready is the right question, but when they ask you, should I buy now or should I wait? What's your kind of go-to answer with that sort of question?
I mean, it really depends on the situation. I think that whenever you're timing a market, no one's going to time a market perfectly. There's lots of people that love to say, oh, this is going to happen or that's going to happen. I think it depends on needs. So if you need a house to live in, if you're going from being a renter to an owner, I think you should do that as quickly as possible because of what we're seeing with Wall Street buying into certain markets. I did a video on it, TikTok, like the top 10 cities they're buying into. It's not places you'd expect. It's like Birmingham, Alabama, just random across the country. So if you're renter to homeowner, start now. Start
Right.
now. If you're an investor, you've got to find what's right for you and really take the time to do the math because there's a lot of stuff that's being pitched online and by a lot of YouTubers that doesn't actually cash flow when you do the math. Second homes are a luxury, so it's going to 100% be dependent on, how much the borrower is willing to spend. So I usually tell people, start looking as soon as possible. I do think rates are going up next year. I will say that. I'm looking at, can you hear my dog?
No,
I'm,
actually, no, but you
He's trying to claw down the door. I'm
can
looking
make an
at,
appearance.
buyers who are in new construction. Like today with the inflation, it really started me going on like, okay, if I can do a 6-month lock, I might get really serious about that. Whereas 2 months ago, I had a totally different perspective. And I'm going to hold on.
No, you're good. Yeah. So here we go.
She would like to be part of this.
There you go. Look at that.
Muppets join the stream.
Perfect. Look, there we go. Yeah, no. So, I mean, I don't know that rates are going to go up. I mean, here's the thing. I think rates are going to fluctuate. And I think they're going to fluctuate because there's volatility in the market. I don't know that rates can go very far in either direction. We talk about it a lot on the channel just because of the way the debt is serviced in this country. They continue to raise rates, which means that they're going to pay more to service their own debt. We're $30 trillion in debt. It's a lot of money. Raising rates means that you're going to pay even more money per month for that. So I don't know how far rates can really go. And we're in a position where, I mean, the economy is not sound by any means, right? I mean, there's a lot going on out there. Take inflation aside, there's just a lot in the market in general. And this was prior to COVID. It's not COVID didn't create a lot of the problems that are out there. They were out there. COVID just accentuated them and made them worse. And, I don't know that they can do too much because they're going to crush their own recovery. And nobody wants to be the fall guy, right?
Look, I agree
Regardless of
with
which
that.
side of the line you fall on with regards to politics, it doesn't matter. Nobody wants to be that guy where the shit hits the fan, so to speak. And so people want to keep things very much the same and let the next guy take it. And so I don't even know what that means at the end of the day, but we'll see, I guess.
I would look at what rates were in 2018 because I could be totally wrong, but I feel like we're about to go back to 2018 where they would try to do increases. I don't think we're going to hit over 4 in any way. Like my gut's kind of like, 3.25 might become the new low,
Right.
Whereas right now it's like 2.8 to 3 on conventional. So I don't think it's going to be dramatic, but I don't know how realistic it is to stay like this forever.
No, I'm with you. I mean, I don't disagree with any of that. I mean, I think rates in the threes are going to be the new norm. I mean, the Mortgage Bankers Association, well, we can talk about their track record, which is not stellar by any means. But I did a video yesterday. They're coming out and saying they're expecting 4% by the end of the year. They're also expecting, the median home price to go down by the end of next year too. But again, forecasts are exactly that. They're forecasts. No one knows. There's nothing in
And
stone
3.5
there.
is still great.
No,
3.75 is still
absolutely.
great. If we hit 5, we're going to crush the economy 100%. If we
Oh,
start hitting
hands
4.5,
down.
we're toast.
Absolutely. We got a question from M Cano. So we haven't really had any questions. You guys are just listening. You guys are like, you know, taking on the two ears, one mouth type thing. You know, you listen more than you talk. But anyway, that's what my wife tells me. If you plan to have a few investment properties in the future, how do you pick a location to buy? So when you're thinking of investment, Jen, you're doing a 1031 or some other reason. You mentioned some of these areas, but what brings you to that market? What things are you thinking about other than the property?
So when I'm talking to clients, it's probably best to talk about how I would advise a client versus myself, because I am my own worst enemy, and I'll be the first person to admit that. So if I'm talking to a client and they want to start looking for investments anywhere in the country, I'm going to say, you need to research where jobs are going. Number one, because if you're like, well, I want to do an Airbnb, great. Find out where the great Airbnb locations are. Then you need to look at the local town laws. You need to go through the notes to see if anything's coming up. But the thing is that if you go to a market where there's good, strong jobs, or jobs are coming in, like if you look at what's happened with Austin and tech, then you're going to be safe in almost every regard, because you'll always be able to get a stable renter. So that's usually what I advise clients, but I'm incredibly conservative. So, having a good stable tenant is always safer than going for appreciation or Airbnb
No, I agree 100%. I mean, you and I talked on a one of the videos we did
Mhm.
about, different markets and exactly that, right? Find where the jobs are going, finding where there's new infrastructure being built, where growth is happening in a city. And a lot of it is surrounding jobs and like you mentioned, Austin. I mean, this happened up in Seattle, years
Yep.
ago. It's happened in San Jose. It's
Atlanta,
all,
Georgia's crazy
Nashville. I
now.
mean, all of these markets that are starting to create jobs and what have you start to grow around them. And so that's what I would
The
tell
other
you too.
stuff,
Yeah,
climate. Climate, I
climate.
think, will be really important in the next 6 years. So when I first started looking at all of this, I was really looking at what cities are going to be the most resistant to climate change. And what's interesting is there's a lot of jobs already there and heading there. So like Michigan, Ann Arbor, Michigan has been just cranking with the jobs and companies coming there. Detroit's, doing well now as well. And a lot of it's tied to them being centers where ultimately, if I know some people think it's fake or real, whatever, the bottom line is it is another thing to consider is the property potentially going to be underwater? And also, how much is your homeowner's insurance going to cost?
No, for sure. Yeah. No, I mean, everybody's expecting California to break off at some point and float into the ocean. So we're going to be an island. So
Yes, finally. That'll
it'll
be
be like Hawaii.
awesome.
It'll be great. Let's see here. So someone, Brandon Coco is saying, would you recommend pursuing a bridge loan to help sell a current home at the same time of buying a new home to relocate to? So any thoughts on doing a bridge loan?
I've never done a bridge loan. I've had options to have access to bridge loans my entire career. I
Mhm.
have yet to find a client that actually qualifies for a bridge loan and wants to do it. So I may be a terrible person for that.
No, I mean, it definitely opens up an opportunity for you to pursue something like that. You've got to figure out if you do a bridge loan, what the debt service on that sort of thing is. I mean, if you're going through the conventional type guidelines on that, can you qualify with both payments, pulling money from one, going another, purchasing another property and having payments on both. The other option is if you were to do a hard money or something like that. What happens if that property doesn't sell? What kind of payments are you looking at on that property while you continue to sell it? Is that something you're okay with? There's some factors in there. I mean, the reality is in this market, it's very difficult to do contingencies. If you're selling a property and it's on
Where
the
is
market,
he though?
what's that?
Like, where is Brandon? Like, that's the $1 million
No, no,
question.
absolutely.
Because Huntington Beach, he doesn't have a prayer, but if he's in Indiana in certain places, he could totally do a contingent sale.
No, for sure. I mean, that's what you have to consider, right? I mean, here in my market, selling contingent is tough. I mean, I've got one
Mhm.
right now that is contingent, right? We put the house on the market contingent upon finding a suitable replacement property. We were able to do both, and it worked out.
That's right.
You need to have the pro on the other side, and be able to have that conversation with the listing agent, telling them what you're trying to accomplish, show that you're doing what you should, that the home's priced fairly, all of that good stuff, right? But if you're in a super competitive market, it's going to be little more difficult, and a bridge loan could be the opportunity to get you there. Your other option is doing some sort of cash out refinance. Maybe you have the money to be able to pull out of a property in the short term, right? I mean,
Well,
similar to a bridge.
there's also investors where if like you might have assets outside of your house and you could use those assets and they'll actually ignore your housing payment if it's listed for sale. I mean, that's a niche investor that you'll usually see in the jumbo market.
Yep.
It's not something that you're going to see with Fannie, Freddie, or Ginnie.
Right.
So it really depends on your price point. But overall, like I've been doing this for 15 years. We close, oh my God, we're going to close 600-700 transactions this year. None of them are bridges.
No, that's awesome. What kind of, I mean, I don't remember the one of the top loan officers in the country, Jennifer. Is there an accolade to go along with
Oh, like what my stats?
Yeah.
I mean, I've been rated as one of the top 1% in the country. I think we're going to be like, I've already closed 100 million in VA, 100 million in conventional. We're here.
No, that's awesome. Yeah. I mean,
The
that's
team does
good
a
stuff to
lot
know.
all over the country.
I mean, what I'm trying to point out here is that, we don't have somebody on this just that has no idea what the hell they're doing that just got their license, right? I mean,
Yeah.
a professional been doing it 15 years, does a lot of volume. So that's important to keep note. So we got Jameson here. Jameson's asking if we see rates increase to 3 to 4%, could we see pre-pandemic prices? I personally don't think so. I don't think you'll ever see, at least here in Southern California, again, all markets are local, things are different. I don't think you're going to see the prices from 2018, 2019 ever again, personally. Now, at some point, you're going to see a pullback. You're going to see some stabilization of prices. You're going to see prices go down. I just don't know that you're going to see prices go down 40%, from where they are at the moment. And that's just my opinion, right? I don't see things going back there. There's just too much demand. Taking right now out of the equation, you've got millennials still buying. You've got a lot of factors playing into the market that I don't think is going to allow that to happen. But
Well, the world's changed too. You've got people who can work from home. That's what I see as a lender. And it's one of the reasons I kept on getting more and more states is because, all the people that were sectioned in San Francisco or Seattle, they can now work remote. So it's kind of opened the door to the rest of the country. So I think that's something to really consider when you're thinking about pre-pandemic is that the way the world works now in many jobs has changed dramatically. The amount of people who work from home now and it's allowable is staggering.
Right.
So something to consider.
That, and you've got people locked in at super low rates that look at, the potential of rates going up, thinking paying more for a property. There's so many factors that play into that decision, whether or not you sell and move up or sell and relocate or whatever it is that people don't really consider. All they think about is, hey, my home is worth more. Now I'm going to go sell it and buy something else. And it's like, okay, well, let's talk about that. Where have prices gone? Okay. They've gone up. Okay. Rates have gone up in some cases. I mean, so there's so many, and do you have capital gains that you have to pay? What does that look like? And so there's a lot of things that it's really easy to think, hey, my home went up in value. I'm going to profit. I'm going to take that cash and go do something. Okay, that's great. But do what and when? And how are you going to get there? Because there's no inventory to choose from. So question here for you, Jennifer. Somebody, I'm not able to put 20% down payment for my budget of buying a $700,000 home. I do about 10%. Instead, if I put 15 to 16% down, will my PMI be less?
I love this question. Yeah, this is a great question.
Put less money down. Does PMI? How is PMI affected in that case?
Yeah. Okay. So first of all, a lot of this is going to depend on where you are in the country once again and loan limits. Okay. Because in certain parts of the country, this is going to be a jumbo loan. Let's pretend that you're in Los Angeles, California. Okay. So this would be a conventional loan. What you want to do is you want a lender to break down what the mortgage insurance is if you put down 5%, if you put down 10%, and if you put down 15%. The amount is definitely lower as you go down in the percentages, but if you have excellent credit, you may look at it and go, oh God, I don't want to put down that amount. It's $10 difference a month. So you want to have a lender break it down for you so you can make an educated decision on it.
So there's two things I heard there, Jennifer. One is get side-by-side comparisons, right? When talking to a lender, have them give you a couple different options of what it looks like. Second, credit really matters, especially when it comes to PMI.
Yes.
Yeah, absolutely. So in some cases, it's better to focus more on your credit than saving for that down payment, because it could end up actually benefiting you more in many cases, depending on where your credit score is and how high you can actually get it. So
yeah, for conventional and jumbo, but if your credit is lower, guys, look at FHA. It's not a bad loan, and that can put you in a good position. So don't wait out a year. You know what I mean? If your credit's 620 or so, just look at FHA.
No, absolutely. I know I told you 30 minutes, Jennifer. You tell me what your time frame is.
I'm fine. I'm up to you. The dog's on my lap. I don't have to cook dinner. It's up to you. It's whatever you're comfortable with.
No, we'll go for some time here. I know we also have Matt, the mortgage guy, coming on at 6, so he's gonna facilitate as well. What's that? Yeah, we could just put us all on here and just go crazy. I'll get off and just let you guys chat.
I love his TikTok. I would be down, but no, that's way too far at that point.
Let's see here.
How many hours are you doing this for?
What's that?
Are you going to be on for like 2 hours?
I do 2 hours every Wednesday.
Oh my God.
This is my give back to the community, if you will.
You are a saint.
Is my time. My time is my give back. And people pay me in thumbs ups.
That's nice. You need those thumbs ups on YouTube for the algorithm.
But right now there's only 39, so these people aren't giving me any love. So
they hate me. I'm really sorry.
Now we're going to abuse them. Let's see here. Let's go with this question. I'm jumping around a little bit here. Is there a cap on the rate of increase on HOA fees in California per year? What is a good estimate to factor in for increases? So there's no cap on HOA increases. Typically what happens with an HOA is that the couple months before the end of the year, they work on a budget, right? With the cost of inflation factoring in this past year, you've got things like, take, for example, I live in a community that does have an association. We have a huge, it's 453 homes, huge green belt, big junior Olympic size swimming pool, clubhouses, all of that stuff. It all requires maintenance. And with the cost of things going up, that means it's going to cost more to maintain those over the year. So what you have is these budgets put together, and they have to factor in how much money is coming in from the association, all of that good stuff. So it really boils down to how well managed that association is. I live in an association that, the last 4 years, we actually had 3 reductions on our HOA dues. I was on the board during that time, so I'll take part of that. But no, I mean, so it does. It factors in how well maintained it is. I do know of some communities here locally in Huntington that HOA dues have gone up every single year for like the last 10 years. I mean, and we're talking hundreds of dollars over that period of time. So there's no real quick, easy answer to it. If you're getting into a home that has an association, make sure you read the financials, read the minutes. This is the time of year when in the board minutes, they start talking about increases. They start talking about potential assessments. If the HOAs say responsible for the roofs in the community or something in the community, and there's not a budget for it, they don't have the money in reserves, guess who's going to pay for that? You as a homeowner. And that's something they're going to talk about in those minutes is, that it's going to cost X amount and it's divided amongst so many homeowners and you're going to get assessed with that amount. So all things you need to keep in mind when buying a property. And if you are buying a property, your agent should be, not necessarily reading the HOA documents per se, but, helping you understand the potential of that sort of thing, for future knowledge if you're somebody that's going to buy in an association.
And don't max qualify. Do not let your lender max qualify you. If you're getting into an HOA, you need to ask them what your debt to income is, because if they're pushing you to the highest that we can qualify you for, and then those HOA fees go up, you could be making the choice between electricity or your HOAs. So smart. Something to keep in mind.
Yeah, exactly. And that's another thing we talk about. When buying a house, first thing, most people just go to a lender and say, how much can I purchase? I mean, what's my max I can qualify for, without actually saying, do I have a budget? Okay, I have a budget. What does that budget consist of? Okay, my kids go to preschool. I got to factor that in.
Yep.
Gas per month, food per month. I go out every night to the club. I got to factor that in. Whatever it is. And instead of going in and saying, oh, wait, I can get an FHA loan that can go to 57% debt to
Don't
income
do it.
ratio. They haven't even taken out taxes of my pay stub. So you can get in a position where it's very difficult every month. You're house poor, and
Mhm.
it's not a good way to live. So, again, Jennifer made a good point is, budget, not only with the lender, but yourself and knowing what you can truly afford and stick to it. Right. What I typically see is somebody says, hey, this is my max. And then we get out there looking and they're going, you know what? Let's go up a little bit. Let's go up a little bit more,
Oh my
because the
God,
reality is
all the
the
time.
more you go up, the more boxes you're going to check in most cases.
Mhm.
So anyway.
Brutal.
All right. Let's see. I'm just trying to get some good questions here. If you see something on your side, I know you can't
I
click on them,
can't
but
see
you can.
anything. There's nothing on my side. There's literally nothing.
No?
Maybe if I hit a different bar,
What?
let's see. Hold on, let me try. I'm on
Uh,
private chat. Oh God, there's people here. I just thought
yeah.
it was you and me, Jeb, and we were making up questions.
No, we're
Oh
good.
wow, there's people
Um,
here.
yes. So let's have a conversation here. Any more news on loan limits, right? There's nothing out at the moment with regards to, they're going to come out soon though. Right around Thanksgiving, we should get that actual increase from the Federal Housing Finance Agency, right? Typically
I'm
this
sorry.
time of year.
I was laughing at one of the comments. What?
So no, nothing in stone yet with loan limit increases, right? But we should get it soon.
Yeah, but
Yeah,
lenders, we've all decided that the baseline
going.
across the country is 625, and we're already doing loans based off of 625. You're in a high cost area, so we made up a loan limit for that as well. I don't have that offhand, but if you guys are anywhere in America, the minimum for conventional that lenders are doing loans on conventional is 625 now.
Got it. Do you work anything? I mean, because you're licensed in 48 states,
Yep.
do you come across uh, first time home buyer assistance type programs often in your when
I
helping people
do.
qualify?
So the one thing I would say about first-time homebuyers assistance is the best programs that I see are hyper local, which means they're going to be city specific or county specific. The big national programs usually aren't that great when you dig into the numbers. And for those real city and county specific programs, you want to make sure that you're not working with a national lender. Like you don't want a call center to help you with that,
You
or
never
have
want a
a call
call center to
center.
help you with that, right?
Huh? Well, you don't
So
want a
you,
call center to help you with anything, but especially that. I mean, look, I even say if it's with payment assistance, look at the city and county programs, and then you want a lender that literally eats and drinks that program.
no,
You need a
agreed.
special.
Yeah, here in California, you're pretty much screwed with regards
Except for
to any.
CalHFA,
Yeah,
but
I
that
mean
won't work in your area.
that's really the only one.
Yeah.
Years ago, Jerry Brown, part of figuring out the budget, decided to cut basically most of the you know assistance programs that were out there because there wasn't money in the budget, and getting rid of that gave more money to the budget and so on and so forth. But they've never come back. So there are some programs out there in California. I know we had somebody mention here. Don Draper saying what states with the best first-time homebuyer programs. He's in San Jose. Texas, I believe, is one that has a lot. But again, this is a question for somebody probably more
Yeah,
local to those states.
we dug
Texas and
into
Georgia, I know, have big.
we dug into the Texas programs because Texas is actually my second biggest state. And as soon as you start getting into the rates were just higher because that's how they're paying for the down payment assistance. San Jose does have some affordable housing. So you really want to look at the below market rate houses. They don't come up a lot, but you have to meet certain income restrictions. So that could be something worth looking at.
No, agreed. And the other thing with a lot of first-time homebuyer assistance programs for anyone out there considering them, a lot of times those have to be repaid, guys. So just don't think that
Mhm.
you're getting free money. A lot of times they're
Silent seconds.
silent seconds,
Yep.
grants that need to be paid back. So it's never free in some cases. So just keep
Watch
that
out
in
for
mind when
equity
going through
sharing.
the process.
Deb, have you dealt with the equity sharing people
I,
yet?
I haven't. I've heard of it, but I haven't.
Okay.
I haven't come across it.
Okay.
Yeah.
We'll wait till we
No.
start coming across that more. But that's
Yeah. No. I mean,
the
I know
scared of
there
that.
are some. Are you talking about the ones out there at the moment that will actually help you purchase a home, like give
Yeah.
you the down payment?
Well, it's like if you put down 10%, they'll match 10%, but then they have an interest in your equity in the house for like forever.
Yeah. 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 No, I've heard of them, but I'm not familiar, enough to really,
Yeah.
here in Southern California, the problem is prices are so high that,
Yes.
10% down for some of these people are, is $100,000. And, they'd be able to do one and then they wouldn't have any money for anything else.
Mhm.
Let's see here. We got somebody, Alejandro, giving a, not
Jim?
Alexandro, gave us $5 super chat. I was
Oh.
approved for 520 on a new build. The builder was asking me for more down to reduce my loan to 450 2 months before the closing. Can they do that? So, here's the thing with new builds. We talk about this every week. New builds, new construction has their own contracts. They can really write anything into these contracts. The residential purchase agreement here in the state of California is written and it protects buyers and it protects sellers. It's really like equal opportunity, if you will, with regards to buyers and sellers. New builds, it is a very unilateral type agreement. It benefits the contractor, the construction, the builder, if you will. But I don't know that they can ask you to do anything certain with regards to putting more money down. That would be using their lender, right? So
Yeah,
a lot of times,
this is the
go ahead.
builder's lender
Yeah,
that didn't.
exactly.
I don't think they properly qualified you up front. And so now they're going, oh, well, in order to do this, we have to get your loan down to 450. And I don't know if they're doing that because it's a debt to income issue or if they're going to be flipping you from conventional to FHA and that's the county limit. Check out my channel. Feel free to call me. I'm happy to walk through what's going on. But that's like a builder lender special. Like they're not necessarily great at qualifying. Like we get so much business from loans blowing up because the builder's lender doesn't know how to do it.
Yeah, and that's the thing is again, these builders lender, we talk all the time about not using call centers, going with an expert, somebody that knows the business.
Mhm.
The builder wants you to use their lender because they have, a little bit more say, they can kind of oversee things, they have a better, probably more communication with them,
Or they
but
own them.
yeah, or they own them and they're not experts in most cases, right? And so
Yeah.
you might get a little incentive at the design center to use them, but typically I would tell you to go out and find your own lender. At least get again, compare two lenders side by side, see which one is the better deal. Because in this case, right, you're in contract and you might find out at the end of the day that you can't actually qualify for the home. So the
Yeah.
reality is they can't tell you that you have to do more to put more down. If you qualify for the lesser amount, you should be able to move forward with that. The only reason they would be doing that in my eyes, and what Jennifer said, is because you can't qualify otherwise. So just keep that in mind. Matt, the mortgage guy, said Unison. I deal with it quite a bit. So it sounds like maybe that is a first-time home buyer program.
It's the equity share.
Oh, the
thing.
equity share. There you go. So we'll ask Matt when he comes on what his thoughts are on Unison. Let's see here. You see anything that you like over there? Any?
Oh, I'm sorry. I have to like get really close.
No, you're good. You're good.
Someone was talking about
so here's a
flossing.
question. So here in the state of California, what are PACE and HERO loans and how does it affect the home sales process?
You
So
want to see that one?
yeah, here in the state of California, we have something called PACE, HERO. I forget what the acronyms are actually mean, but they essentially allow you to do upgrades to your home, typically around energy efficiency, that sort of thing, like new windows. Maybe you can put a new roof on the house. You can do certain things to the property. And instead of the paying for those fees up front or the cost of those items up front, you can actually add them to your property taxes. And so instead of having coming up with $15,000 to do your roof, you can add it to your property taxes and pay it every month over a period of time until it's paid off. How does it affect the sale of a house? It doesn't really. As long as there's equity in the property, it gets paid off at the closing. There's no real, the buyer doesn't see it, if you will, and it's all done. So there's nothing really there to discuss in that case. So but anyway, We'll move on. I
Al
digress.
always has really hard questions. Just a heads up. He got me on
Yeah, no,
my lives with some investor
I'm pretty sure
questions.
that guy
Al,
just stays on he just like jumps from
he's
YouTuber to YouTuber. Him and Jennifer are going to start their own channel talking about real estate soon because
there.
they probably know more than I do at this point.
I think they might know more than both of us at this point. We may need to hire them and bring them on our teams immediately. Like I know Jen would totally fit the vibe of my team.
No,
Al, we
I'm
would
with you.
definitely have you be a processor, maybe an underwriting manager.
Let's see here. I'm going through some questions, trying to find
Okay, let me
something
see.
here. See what we got. We don't have a lot of questions, just a lot of comments. We do have.
You've got another new build. There's a lot of new build questions that I found a builder reserved a lot. They can't start building till January, but they want me to sign a contract now to lock the lot. Is that normal? Totally normal.
Absolutely normal.
Lock you into
Where is that? Who had that question? Do you see it?
That was Romaine Newton.
Romaine Newton. Here we go. Yeah, so 100% normal. You know, that builder wants a deposit. They want to know that they've, you know, in some states like California, they could build an entire community without you know, getting people into escrow because they're going to sell quickly. In some areas, right, you know, that they need to lock in order to build those properties to make sure they're not going to be upside down and at the end of the day when building those properties. But completely normal. And a lot of times, you know, if you're in the first phase, we talk about this all the time. If you are lucky enough to be building a house or buying new construction, rather, and it's a multi-phase development. If you can get in the first phase, chances are you're going to see equity gained with each one of those phases being built because prices tend to increase, right? We talk about it all the time here. And so that can be one of the benefits of buying new construction is seeing those gains over time, especially when your house is, when you're in contract and your house isn't even built yet. And by the time it's done, you've already gained that equity. So that part's nice.
Can we just tell everybody something so important, which is if you're buying a new build, the date the contractor, when you first get into contract, is saying the house is going to be complete, likely is not when it's actually
Yes.
going to be complete. That they have in their contract that it can take, you know, 2, 3, 6 months after the original promise, and you can't do anything. Because I get that. I have someone texting me right now looking for legal advice, and I'm not a lawyer because a builder is 3 months late.
Yeah, you have no stance. Let me tell you, I'm not an attorney, but that contract again is written to basically protect that builder from being 3 months late. They could probably be a year late, and there's nothing you could do. But with that said, I mean, you make a very good point, and I would say take that into anything that involves a contractor, and not to, I'm not shitting on contractors, pardon my language here, but it is just the nature of the business, right? The goods, they're counting on other people in most cases, subs to do jobs. And these people are busy. And so, you know, a remodel, an addition, a new construction, a new bit, whatever, you've got to factor that time into your plan so that you're not, you know, in a rental with, you know, I'm going to be out by the 31st and find out what I need another month or another 6 weeks or whatever it is. So good points. Good points.
Anything else before Matt takes over to teach everyone about Unison, which will be great.
Here we go. Can you go over a gift of equity loan and how the gifter would have to pay and claim on taxes for the final sale to a family member? So, you know,
I can tell you what it is, right?
Yeah, I mean, let's talk about a gift of equity. So I don't know how the taxes go on that sort of thing. I mean, I believe we talked last week per year. I think it's either $15,000 or $25,000 that a family member can give tax free and avoid paying the taxes on it. Right? They can do that every single year, and there's so many that they can do. But I'm not sure how anything other than that. Right? But
gift of equity
what is a gift of equity?
Yeah, so gift of equity is different. You want to talk to a tax advisor because I've heard conflicting things. I've heard from some people that it just goes against the lifetime estate. And I've heard from others, you know, so talk to a tax advisor about that. Never ask real estate agents or lenders because we could give you bad information. A gift of equity is like, let's say I'm going to buy a house from my dad, and it's worth $100,000. And he says, okay, great. You know, Jenny, I'm going to sell it to you for 100,000. I go, cool. I'm going to get a loan for 80,000. Okay. He's gifting me 20%, which is the equity between 80 and 100.
Oh,
So in the
yes.
bank size, I'm putting down 20% via this gift of equity. There's no, it's a paper gift. So it's just the way the lender structures the loan. But like with any of this stuff that's slightly complicated, you need a lender that knows gift of equity inside and out, or they will screw it up.
Yeah, good point. So I was talking about something entirely different there
Oh,
when I read the
awkward.
question, and Jennifer nailed it with the gift of equity. So way to go there. And we often get questions or people asking, can I actually sell my home for less, or my family member wants to sell me a house for less than it's actually worth? Can they do that?
Yeah.
Absolutely, they can do that. You can sell your house for whatever amount you want to sell it for. It's just, in some cases, there's an arm's length transaction that has to happen, or the lender wants to see certain things. So, in that case, now, do you guys, what happens in that case with a non-arm's length transaction, Jennifer? Is there anything that needs to be documented in that case
Well,
for your
so I mean,
file?
I do gift of equity if it's like a family member to another family member, and there's nothing. So they want to make sure that you're not doing a bailout. So if, for instance, what we're looking for as a lender is if your cousin is selling you their house at a discount, we want to make sure that they're not about to foreclose and you're bailing them out. That is where you have issues. But traditionally, with what you guys are talking about with gift of equity, it's a parent who's like, I don't want all the money. And the mistake people make is they go, okay, back to that 100 versus the 80,000. They go, well, my dad's going to sell it to me for 80K and I have 5% down. Whereas I stop them and I go, whoa, 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 this house is worth more. Why am I taking money out of your bank account? Why am I hitting you with mortgage insurance when I can structure this as a gift of equity so you don't have mortgage insurance? We're not touching the money in your bank account. I mean, I have family calls where everybody's on because we're usually trying to figure out, because you can do a gift of equity and have mom and dad pay the closing costs
It's
instead of,
huge, guys.
so there's lots of ways to do it. You just want to make sure you're working with someone that can have those conversations.
And that is not the call center. Yeah, work
Oh,
with a pro, guys. It could be all the difference in the world, right? I mean, it's
yeah.
in that case structured where you could actually keep the money in your bank account. So good stuff. Selling a home in California, which I've lived in for less than 2 years, and buying a home in Vegas, do I have to pay capital gains? Yes. You'll pay short-term capital gains because you've lived in it. Well, if it's been over a year, you'll pay short-term capital gains. So it will be prorated to some extent, but you will have capital gains if it's been your primary residence, you've lived in it less than 2 years. Yeah, there will
You
be
may
some
want to wait.
taxes that need to be paid. And some people ask me that, all the time, is they're like, hey, I'm selling my property. And, let's talk about capital gains here just to make something clear. So when you sell a property, your primary residence, if you've lived in it 2 of the last 5 years, if you're an individual, single, not married, you get up to $250,000 in gain. And if you're married, $500,000 in gain. I often get people confused, and they get it confused with a 1031 tax exchange because they think, well, even if I make over $500,000 on the gain, I'm buying another property anyway. Well, it doesn't matter, right? Because that is completely separate from an investment property. An investment property, you can roll over that gain into another property to avoid paying to avoid paying capital gains on it. But when you sell a primary, you only get a certain amount of non-taxable gain, at which point anything above and beyond that would be taxed. So, you're in the environment at the moment where people are making a lot of money on their homes. And so that's just something to keep in mind, is that you might actually not walk away with the full amount like you thought you should. And so just
Yeah.
it's why it makes sense to have those conversations with somebody prior to just putting your home on the market.
A
So
real tax person. This isn't where you do a walk-in tax thing. Like if you guys are doing anything with real estate, you need to establish a relationship with a tax advisor that understands real estate. This isn't where you go for like your H&R Block check-in, doing my easy taxes.
no, agreed. I'll let you off here in a minute, Jennifer, so I don't keep you all night. I know you
And my
got
dog's going to kill someone. So
yeah,
that's
here we go. Well, last question. We'll leave it with this one. Looking into removing PMI, is a BPO a good option, or should I go for a full appraisal? So if somebody's looking to remove their PMI, they don't want to refinance, what's the process?
It's totally up to the servicer. So what you're going to want to do is you're going to want to reach out to the servicer, who's the person that sends your bill to you every single month, and ask them what their process is. If they can do a BPO and the value comes in, why would you pay for a full appraisal? But if the BPO comes in low, then fight for the full appraisal if you think it's going to actually appraise. But really talk to the servicer about that, because they'll have specific rules.
No, absolutely. And we talk sometimes, sometimes lenders want you to be in that loan for a year, 12 months, or maybe 2 years in some cases before they'll allow that PMI to be removed. Your other option in that case is if you have the equity there, it's there, is you could do a refinance and have it removed. But just, again, you have options. Get somebody to compare it with, the cost and that sort of thing, and decide whether or not it makes sense for you. So, so as I mentioned earlier, Jen was only supposed to be on here half an hour.
I'm going to sneak out.
She's going to bail out on us. Like her videos, go watch them, go follow her on TikTok, Instagram, YouTube, all that good stuff. I appreciate you, Jennifer. Thanks for being here.
Thanks. Good luck with the next
all
hour.
Right. Adios. Bye. All right, guys. So Matt and the mortgage guy, as I mentioned earlier, is going to be joining us shortly. He's probably doing something fun right now. I'm going to come and he's going to be tortured with questions for the next hour or so. But while I have you here, I'm going to try to find some questions and see if I can answer them by myself without any assistance. Imagine that. But I do appreciate you guys being here. If you enjoyed having Jennifer on here, you find any value in the content at all, hit that thumbs up. Let's see what we got. So we don't really have a lot of questions, but see if we can find something. So Gallo has a question here. Home builders' fiscal year is usually in December. Should I wait for any last minute incentives? I don't know that you're going to see much in the way of incentives at this point. This isn't the car business. In fact, car businesses aren't even doing incentives at the moment just because of the lack of supply, right? Same thing with housing. If you're in a market that seems to have a lot of properties, right? There's a lot of, new construction sitting, it's not selling. Maybe in that case, there's room for negotiation. But oftentimes, these properties are sold, right? There's not really, they don't need to offer an incentive because it's going to sell either way. So just keep that in mind. But, it never hurts to ask. I ask for deals all the time on things. I go to buy something and I ask if they'll reduce the price. My wife thinks I'm crazy, but more times than not, people do it, right? You need to ask to have that conversation. So if you're going in to buy new construction and there's options, ask for one of them. Ask for a discount. See what they're willing to do. You never know. You never know. All right. So Matt, the mortgage guy's here. Matty.
What's up? What's up, buddy? How you doing?
I'm well. Thanks for joining me, my friend.
Thanks for
Look at this.
me.
Just got two pros on. Answer some questions here.
Yeah, and people don't understand, like, having somebody like Jen Beeson available to answer any of your questions. Like you mentioned, the call center not being the best spot. Like, no offense to anybody working in a call center, but like these people did a great job at Chick-fil-A last month, and now they're working in a call center. They're answering questions about your biggest financial decision ever. You've got your choice between that person and Jen Beeson, who's closing hundreds of millions of dollars in mortgage transactions per year, has an excellent team and can advise you at a high level. Like that's one thing about mortgage that always kind of cracks me up. Is somebody's like, well, I did a search and I found this on Bankrate and I found this. Like, it's not just that easy, right? Like, well, click button.
The problem is people don't know what they don't know, right? I mean, it's that simple. Is that you don't understand that you're not dealing with, you think everybody's the same, and the same can be said for real estate agents. Like everybody's the same, but the reality is they're not. And it's not just in expertise or time on the job. It is the ability to answer the questions, and when they don't know the questions, tell you they don't know, but go find you the answers to the questions, right? It's communication. It's a lot of things. So
right. Yeah, there's something to structuring loans in the right way, right? Like your uncle can give you financial advice for cheaper than the best financial advisors in the world. But, the money you're going to save by going to your uncle might cost you 10x what you saved by doing something that's not necessarily the best Anyhow,
No,
I'll get off
enough.
my
Fair
soapbox.
enough. So for those of you who don't know, Matt is also a mortgage professional up in the
I'm up in Sacramento. I didn't realize
area.
that Jen's in California too. She's right down
so
the street
Sacramento
from me.
area as well. Fellow YouTuber, almost about to hit that 10,000 subscriber mark. So if you guys aren't already, go hit his channel up. Also a TikToker now. He's TikToking, Instagramming. So go follow him and all that stuff and get to know Matt. But for now, we're going to answer some of your questions. So if you have questions, put them in there. We'll get to them, and we'll keep Matt for as long as he wants to stay. So
jump in there and see what
Coinster, how much trust do you place in Zestimates? Are these algorithms often close or way off in your experience? So here's what I'll say about Zestimates. I've talked about them many times before. Zestimates are easily manipulated. They are exactly what you said. They're an algorithm. It's artificial intelligence pulling data from multiple sources. What they can't do on that data, let's take, for example, a property that backs to a street, right? Let's say it backs to a major street. Let's say it backs to the 22 freeway here in Southern California. And it's a 3-bedroom, 2-bath, 1,200 square feet. Well, it's taking that property and it's going to compare it to other 3-bedroom, 2-bath, 1,200 square feet homes that aren't backing to the freeway. Now, for some people, backing to the freeway might not be a problem. For others, it could very well be one. And so it's not truly taking that location of that property into account when doing that. Another thing it's not doing, taking in the upgrades. You fully remodeled your property. Mine is completely original on the inside. It has no way to factor that in because it doesn't know what my property looks like. It doesn't know, the curb appeal, the style, all of that stuff. It is literally taking numbers, bedroom, bathroom, lot square footage, and using that to help, come up with the value. And in some cases, it's relatively accurate, especially if you're in an area that has tract housing, because it's very similar. Out in a rural area, probably not that effective, right? When you got property on big acreage, it has no way to really factor that stuff in. But what I said earlier about manipulating the value, I've done videos on this. I don't know where the videos are at this point in that plethora of stuff I've put out there, but I've showed the value of a property, what it said prior to me doing, inputting it into the MLS, and say, for example, it said it was worth $1 million. I say it's worth 1.2, right? Because whatever, I go and input that property on the MLS, it starts syndicating out to all these sites. Well, guess what Zillow does now that I've listed that property for 1.2? Their $1 million estimate now goes up, and maybe it goes to $1,150,000 or $1,175,000. Maybe it doesn't happen all in one day. Maybe it takes 3 or 4 days for the value to slowly increase. But because I listed that property at a higher amount than what they said it was worth, automatically their estimate goes up. So take it for what it's worth. It is an opinion of value. It is not fact by any mean, but I mean, again, my opinion of value is not fact either. I just have more ability to factor different things in than that algorithm does without knowing the area, location, all that good stuff. So thoughts on Zestimates or anything in that realm, Matt?
Right. Yeah. To back up what you said, and then, in my daily practice as a mortgage broker, I've got people that say, oh, Zestimate, says this. And, sometimes it's relatively accurate, but a lot of times I look at it and I go, wow, that's crazy. Because we've got other tools that we can use from different lender partners we use where it might tell me 775 and the Zestimate for whatever reason, because the algorithm is just pulling data that may or may not, be as relevant as the algorithm thinks it is, says 900,000 or 910. And in general, because I talk to hundreds of people every single month, like you want to believe the best news, right?
So absolutely.
If 4 different sites have 4 different values and the Zestimate says 909, I tell you 775, you saw your neighbor's house sell for 790, you're going to be like, oh, it's worth 910 because the Zestimate. And so,
well, you just said people want good news. I think that's the only reason I have any subscribers is because I'm the only guy out there not calling a crash. So people are like, I'm going to follow this guy just because I like what he says.
He makes me feel good inside.
He makes me feel good about the market. I'm going to buy a house. I'm with you 100%. I mean, here's the thing is they're a tool. They're, when you're a carpenter, you have a hammer. you have a screwdriver, you have a wrench, you have different tools. A Zestimate is a tool. It is not your only tool, because if it is, you're not going to build very many houses or do a lot of repairs. Same thing with you. You guys have somebody call you and say, hey, do you think my value's gone up? Can I get my mortgage insurance off? Chances are you might go to Zillow or one of these Redfin or something and type in the address to see what the Zestimate is. But you're not going to use that as your only option in helping them come up with the value. You're probably going to call a real estate agent or have their agent look it up and say, okay, are there comparables backing up? Are we there? Whatever, right? It's not a one size fits all deal. So anybody that's relying on it for that could be pleasantly surprised at the end of the day.
I hate to kick a man while he's down, but if Zestimate was really good at valuing homes, they probably do a little better in the iBuying realm.
Fair enough. Fair enough.
Oh, sorry, Zillow.
Let's see here.
While you're down.
So Jennifer, Jennifer Beeston says, thanks, Matt, with the compliment you gave her. And Jennifer Lego comes in and says, what home listing site do you recommend? Currently using Realtor. Honestly, I'm a big fan of Redfin. I think Redfin's a prettier looking site. By far the most visually appealing of any of the home search sites out there. But at the end of the day, they all have the same information, right? What happens is we put a property into the MLS, or I'll back up on what I just said in a moment, but we put up a property into the MLS, it syndicates to all these sites. So it's input one place, that syndicates to Redfin, to Zillow, to Realtor.com, to Trulia, to whatever else, right? So all of the sites have the same information. But one caveat or one change to that is about a year and a half ago, Zillow became a broker, right? They became a competitor of everyone out there. And so some companies said, you know what, we don't want our properties to show up on Zillow because they're competing against us. We don't want our listings to be on their site. And so you have to opt in for that. So in this case, Zillow might not be showing you all the listings if a broker has said, we don't want our properties going there. So sites like Realtor.com are probably a little less biased in that opinion and probably have all the data you need.
Yeah, I'm a big fan of Redfin as well.
Looks pretty.
Yeah, quick shout to a good Realtor, though, is that, in a market like we're in or we've been in where things move fast, like speed to what you're looking for is important. And so, like you said, you plug something in an MLS, it gets listed, then it goes out to these websites, rather than, browse Redfin once every 48 hours. Make sure you're partnered with a great realtor that knows I'm looking for a 3-2 with at least 1,800 square feet and has your criteria. Because then, Jeb plugs you into a system that says, oh, hey, listen, you were looking for it in this neighborhood with this school. This just came on the market. I'll get you some information. Do you want to go see it tomorrow afternoon? And then, we're going to write offers because this thing might go within the first 5 days.
No, agreed. Naima, after buying a house, how long should I wait to refinance, Matt?
This is an interesting question. It's funny, as I saw this question too, and my question to you is, why are you looking to refinance? If you just bought, there would be very little benefit in a refinance unless there's a couple scenarios in which it might make sense to refinance, and then you would do it 6 months in, maybe, right? If for whatever reason you bought with an extra high interest rate and you got a big credit to help cover closing costs, then maybe there's enough benefit in refinance. But whenever you refinance, the first question you ask yourself, and then in turn ask the mortgage professional, is what's the benefit? And as much as lenders come up with the most nice advertising in the world that says refinancing is free and gold nuggets fall from the sky every day, like refinancing costs something, right? And so, between title fees, lender fees, and other things, like there's going to be a cost, and that's going to be rolled into your new loan. And you got to figure out, like, I'm lowering the rate this much, I'm saving this much. When I compare that to how much it cost, what's my break even? Is it going to take me 6 months to break even, 9? And if, barring like any huge drastic moves in the market where rates went down 0.5 point overnight, there wouldn't be a good reason to refinance. I know for some people, they work with a builder's lender that charges a higher interest rate, but maybe offers a $7,500 credit.
Mm-hmm.
And they come to me 6 months later and say, yeah, the builder's lender was 3.625. And I go, okay, well, since you borrowed 600 grand, we can get you to 299. That's going to save you enough. This thing pays for itself within 7 months. Refinance makes sense. But, I think the first question to ask yourself, rather than like, how soon can I, is what are the reasons? And make sure you're talking to somebody that has your best interest in mind, because we hate to knock on call center mortgage.
No,
folks.
we don't hate that. We just do it over here.
Okay.
It's actually welcomed. It's fine.
I mean, because the truth of the matter is, like, I get those calls, right? I have mortgages, I own houses, and so I let those people call me. I want to hear what they're saying. They're trying to hit a quota and sell mortgages.
Absolutely.
Somebody like Jen, somebody like me is trying to serve people, and we add value, and that's why we, have, decades long businesses, good reputations, and all that other stuff. Make sure you're talking to someone who's going to give you good advice.
Absolutely. And another thing to keep in mind is if you actually appreciate the person that did your loan, typically if you refinance within 6 months, that lender is going to have to repay anything they made on that loan. So just keep that in mind as well. And get comparisons, right? I mean, if you're considering refinancing, get something in writing and see why. I mean, we talk about it all the time, like a cost benefit analysis. How long is it going to take you to recoup any cost that is associated with doing that refinance? Does it actually make sense? What happened if rates go down again? Right? I mean, so just there's a lot of factors that go in there, and that's why working with a pro to start with can walk you through that stuff. Willing 7, the comments that come, I wish, I'm assuming it's a male. I wish he would just come in. I wish there was an ability to push it and it would read the question the way that he was thinking it was written. Because I'm pretty sure the way I read it in my head, like every time I laugh out loud, and I want him to read it in this case, is like, what is it actually? Does it sound like it does in my head, or is it completely different?
How does it sound in your head, Jeb? I love to hear it.
Let's see here. I don't even know if I can do it. It's like, what do you drink? Like, I can't even get a grasp on it, because if I say it like it might be insulting. I'm not even sure. It's like,
he's asking me, what am I drinking? Because I keep lifting.
I'm not. You might be Bubba. I think I'm. I forget what he calls me. I'm like. He calls Josh Luis, and I'm like, I have a nickname too, and I forget what it is. He'll come up here in a minute. It'll be it.
I'm looking at this guy's next comment. I like this guy already. He's like, I looked left when I talked about a good reputation.
Yeah, so we should just so
you know, Willing, this is black coffee. This is like been up since 4 a.m.
Body language lie detector says that statement may have been false.
All right. Well, I'll take the Pepsi challenge.
It's too good. Oh God. All right. Let's see. Let's get some questions here. We don't.
I do want to answer the question.
Really asking a lot of questions.
Coffee. Black
What's
coffee
that?
At 6. This is black coffee at 6 at night. I don't know if that's recommended.
Oh, dude, I drink a bang at what? This is the only day of the week I really drink these. But I drink it at like 5? We start this at 5, so I drink it right before 5, and people are like, "Don't you have trouble sleeping?" I'm like, "Nope, go right to bed, my friend." I get up at 4. I get up at 4:15.
Every day.
Mornings. Yeah. So like, not every day, but 5 days a week.
What do you do that early? Go to the gym?
I go to the gym.
Yeah.
Yeah. So by 8:30 at night, dude, I'm done. Like I hit my head hits the pillow. I'm literally out in like 5 minutes.
Yeah. Last night, my wife's like, "I'm tired. I think I want to go to sleep." I'm like, "I'm in. I'm always in for early to bed." You know, the kids are
absolutely.
Asleep.
So my nickname is Werewolf, by the way.
Okay.
I'm not sure where that goes.
I'm Bubs.
You're Bubs. Here we go. Jay Homeboy. Parents want to put their kids on title on their rental. Years later, parents remove names from the title by quitclaim. House is paid off. Kids will pay parents the value. Anything to worry about? Yeah. So you could get reassessed on your property. It depends on where you're located, right? If you're in California, your worry is that you get reassessed on the property taxes at that time by removing those parents and just having the kids on there. There may be a way. I mean, when you do quick claims and you change title and all that good stuff, there's a form that's filled out that basically shows what's happening with the transfer of title. And so, they're pretty strict on this sort of thing, especially here in Orange County. If there's any change in title, you got to be specific on what happened and why. I mean, wife added a title, removed from title, put it in a trust and all that stuff in my property. And one time they basically denied me. And so I had to do an appeal and the whole thing, and it got it overturned. But they want that money for the property taxes. Now, if you're in any other state other than California, your taxes are getting assessed or reassessed probably annually or every 2 years. So probably less to worry about there. Outside of that, I don't really know if there's much concern there with handing the value over. The fact that the property's free and clear, there's no mortgage to really be concerned with. Now if there is a mortgage, well, it says house is paid off. So never mind. So I don't think anything I'm missing there, Matt.
No, I don't think so. Yeah, it's just our lovely state of California, right? If they can,
hey, dude, that's the one good thing we got going for us. Prop 13.
Oh, right. Yeah. But
Yeah.
I'm saying
the
with
only
the
good,
reassessment
I mean,
thing,
not
they're
the only
trying
good
to
thing.
get that. They're trying to get that dough whenever they can.
Oh, everything, So if they remove that, I'm out of here. Not really, but maybe. Let's see. How accurate are built-in mortgage calculators on real estate sites like Realtor and Redfin? Let's just say in general, how good is an online mortgage calculator, Matt?
Well, they're perfect in that most of them aren't necessarily saying here's today's rates. It's just saying here's a calculator, plug in whatever rate you want. The problem with it, from what I've seen, is somebody calls me up and they say, "Hey, I saw that I can do this, or I can refinance $380,000 and my payment is this." A lot of them don't take into account taxes and insurance, or they leave it to you, the consumer, to fill it in. You might not know, that taxes are 1.25% or what that is.
Right.
And so, they're only as good as the data that's inputted into them.
Absolutely.
And so if bad data goes in, or if the data is just missing, and you say, "Oh, I thought I could borrow $400,000 for only $1,362 a month." No, we're just talking principal and interest. That's not even taken into account the taxes and insurance and mortgage insurance or whatever it is. Because I've poked around a lot of different mortgage calculators, and all of that stuff has to be manually input. Your taxes, your homeowner's insurance, your mortgage insurance.
And mortgage insurance, exactly. Yeah. If you're putting less than 20% down, it's not factoring in that mortgage insurance in most cases. Why, again, it makes all the sense in the world to talk to somebody that actually knows and can plug the numbers for you. Any good mortgage professional out there, once you've been pre-approved, should be able to change those numbers pretty quickly and get you an updated idea of what that payment would be on a new price or what have you. It's just the initial step of getting pre-approved takes a little bit more time, but saves you a lot of time in the end, a lot of heartache in the end, and gives you some certainty, especially in a market with a lot of uncertainty in it at the moment. So,
right. Yeah. I mean, I've always done it, but even more so lately. I just push people. If you're thinking about buying and there's a good chance that you might buy in the next 3 to 6 months, let's do an application. Let's get your docs in. 1, we can foresee any issues you might have and try to fix them now. 2, we've got your credit score. We've got your, asset profile. We can see what you qualify for and show you at 5% down, at 10% down, at this price, at that price. Here's exactly what it looks like. We provide people with an Excel spreadsheet that's editable. And so they can look at what it's like at 525 and 550 and 575 and mess with it and look at the different, monthly payments and total cash to close. And then there's no, that's a really accurate calculator. So accurate that, everything auto-populates. The mortgage insurance auto-populates, and it's all based on a formula. And so, high quality lenders, and for tonight's episode, we're talking Josh, Jen Beeston, and Matt, the mortgage guy, are Jeb's buds that are high level lenders, are going to give you the best information. Online, what you'll find is some of that stuff is geared towards kind of drawing you in, right? It might be a marketing tool.
Yeah. It's 100%. It's it's 100% marketing. So, let's see here. Hey, it's ATM. Is ATM. Hey, is ATM. I have no idea. Situation of refi. I have a VA loan, have a triplex, living in one unit, renting out the other 2. I refi after 6 to a conventional to fill my personal unit and free up my VA space to rents and repeat. So, so they're considering refinancing. It sounds like getting out of the one unit that they're in after 6 months, refinancing it to a conventional, after 6 months, freeing up their VA to go out and buy another one.
Right.
Are you asking? I'm not sure. Is there a question associated with this?
Yeah, I mean, I think my guess is, and this works for a triplex, it works for a single family. The VA loan is only for owner occupied home, so you can't use it on a rental property. And so, this person is doing a form of house hacking that's done a lot of times with the VA loan, more common even so with the FHA, because you can buy a fourplex with 3.5% down. And if the question is like, can I do this? The answer is yes. You'd be refinancing into conventional, and then, freeing up your VA eligibility, go out and buy yourself a new owner occupied. Just make sure that you're not committing any sort of loan fraud that's actually going to be your owner occupied residence, because that's what the rules are for VA. That's gotta be your owner occ.
No, absolutely. And the thing is, there's so much idea behind house hacking, and that you're going to be able to buy these properties and that there's going to go up in value, and you're going to be able to do all of these things in 2 years or 1 year or whatever. Just make sure, like, if you're buying a property, you're buying it for the right reasons, and that it makes sense financially to do that, right? That, people are talking about, well, hey, I'm going to buy this property. It's not really the right one, but in 2 years, I'm just going to sell it, and I'm going to take the money that I gained from that, and I'm going to go buy another one. And great. That's awesome if the market works out in your favor. But what happens if it doesn't? What happens if the market doesn't go up? What happens if it pulls back? Maybe you're in a market that's going to get saturated with some inventory or whatever. Not that I expect any of that to happen, but you have to, play defense, right? You have to come from the defensive side a little bit. Even somebody like me that's optimistic on the market, you have to consider all of these things. What happens if this does happen, and you're in a property that you didn't really like to begin with, but you just bought it because you had this plan. Something to keep in mind. That the house hacking is so popular because, again, media, and not media per se, but more social, it's created this whole dichotomy behind, it's easy to make money and house hacking and having these side gigs and all this stuff. And yeah, it is if everything works in your favor. But if it doesn't, right. Could be coming from a bad spot. So
yeah, I had a conversation this morning with our buddy Mike Zuber on this exact thing, that, like, those of us who have, seen enough people crash and burn, realize that, like, it doesn't always work perfect. And anything you see, any glitz, glamour, 0 to 100 million in 9 months, like, that's all just Instagram fluff flexing. The real world of real estate, it's a great place to grow wealth. It's done over decades. And so, you want to make sure that when you're playing with a powerful tool like debt, you use it wisely. You don't get into deals where everything has to line up perfectly for it to work, right? Not every deal is going to be a home run, and you want to be able to, get in a deal and say, okay, this is the rents I was expecting, and this is how much maintenance I was expecting, but maybe this was a little bit different than I thought. And a couple things go wrong, and it doesn't devastate you and derail you, and all of a sudden, you're out of real estate for the rest of your life. Plan to have everything not go perfectly and have a little bit of wiggle room within your game plan so it doesn't devastate you.
No, agreed. If you're watching right now, 163 of you on, we got 82 likes. Do me a favor, hit the like button if you find any value here. If you like Matt's headphones, hey, right. just give us a like. Hey, as of today, I got an email from YouTube. I normally count the dislikes too, because I'm like, hey, if you don't like it, just dislike it. It's all good. You can do that too. But as of today, I got a note that they're going to stop the count on the dislikes. So your dislikes, really? Yeah, if somebody hits it, I think it'll just show one. Like, it'll just show a thumbs down that somebody hit it, but it won't count them anymore.
What kind of world are we living in, dude?
Dude, it hurts people's feelings. My feelings are hurt because you gave me a thumbs down.
This is not relevant, but I have to share it with you because it's the same type of mentality, and it's ridiculous. My son's school district implemented something where no matter what you score on any test, you get at least 50%. And so if you score, if you only get 5 out of 50 questions right, and that's a 10%, you get 50%.
That is
and my son was telling me this, and I was like, what kind of universe are we in? where it's like somebody might get their feelings hurt. Let's 50% at least.
Dude, that's so like spot on with everything. It's so good.
We're only going to count, like, we don't want to count the dislikes. We don't want to hurt Matt's feelings or Jeb's feelings.
No, we're not going to show you those anymore. But people just came through and gave us a bunch of likes. So thank you guys. And we got 2 more dislikes. So thank you for those too. I can still count those. I can still count.
They didn't like my headphones. I didn't want to wear too nice of a shirt. I didn't want to hurt Josh's feelings. I didn't want.
Oh, there we go. I like it. I wore like gym clothes to the office today because I had no intent of leaving. So I was like, you know what? I'm just gonna go in full gym attire.
Nice.
All right. So let's see here. I saw a question a minute ago that was worthy of posting. If I put my house up for rent, how long of rent history do I need to purchase a second home? Now, are we saying a rental property? You're purchasing are you purchasing a second home? You're still going to have a primary, or are you purchasing a home to live in? I guess either way, what's the rental history needed on that other property, Matt?
Right. Yeah. And the most common for me is somebody might be leaving their current house. They're buying another house and they need to use rental income to qualify for the next one. As long as you have a lease agreement, we can use that rent. Where people get into trouble and we can't use rental income is where you have owned a property as a rental for multiple years and it never showed up on your tax returns getting rental income. I can't tell you how many clients, Jeb, I have where it's like, oh, you bought this place in 2018, but 19 and 20, neither one of those tax years have any rental income. Which tell me, oh no, I got a lease agreement. Like it's getting $2,200 a month. That's bad, right? If you just moved out of it and you got a lease agreement, of course it's not on your taxes yet because you just moved out or you're moving out, right? And so there's no like regulation around like you've got to have at least 6 months of rental history to use it, because truth be told, the most common use of rental income that we see is departing residents, right? Like you're leaving this one, you're buying the new one. We just get a lease agreement for the place you're leaving, and we're able to use 75% of that right away. So it rents for $2,000. We get to use $1,500. Add that to your income side as rental income. They use that 75% factor because there's going to be some expenses involved. They know that about real estate, so they just give you
good
75%.
Stuff. Richard's come in and said he wasn't going to tell him a 75 is an A+ in the UK, bro. I would have been valedictorian in the UK. I would have been a stellar kid.
Is that true?
I don't know. Perhaps it is.
My son's going to want to.
We're just going to go with it. I'm just going to tell people that, even if it's not true. I learned it on the internet, so it's true. I just noticed your banner behind you with the Matt the mortgage guy. Look at that thing.
God, is that tough. Sweet or what, dude? It's like a thick piece of plastic too.
That's awesome. I like it.
The Powered by You mortgage is new. Just moved to You mortgage. I don't know when it was official, but I know I'm having the grand opening next Friday. If you were a little bit closer, Jeb, I'd have you swing on by, but it's a plane ride for you.
Yeah, no, it's a little jaunt up there, but no, congrats, man.
Thank you.
I knew the preparation was happening. So anyhow, let's see. Popo Yaya. I'm selling 2 houses, moved to an apartment. I lived 2 years in each in the last 5 years. Which house shall I consider as a rental property for capital gains tax purposes? So, that's a good question. I would tell you the one that you can get the most gain out of is and tax-free is probably the one that you should take as your primary. And then the other one, you should 1031 it. Now, you could say they're both equal. Then in that case, it's really up to you. I mean, if one you're going to pay taxes on and the other one you're not, then go, make sure that one's your primary, and the other one that you would pay taxes on, that you just 1031 it into another property. And that way you can avoid those taxes, take advantage of those, those exemptions that are out there, and keep it rolling over would be my suggestion.
Cool. Let me ask you a follow-up question to that, Jeb, because I know what I know, but I've heard conflicting stuff on this where, this person's talking about the exemption where if you lived in it 2 of the last 5 years, single person up to 250,000 and a couple up to 500,000, you're exempted from those capital gains. If you do that, like say you and your wife sold the house you've lived in, had 400,000 in capital gains, you're exempted from it. You buy a new place, you live in that for the next 5 years, you can do that again, right?
Yeah, you can only do it once every 2 years.
Okay.
Yeah. So every 2 years you could do it. So in this case, he couldn't sell one, keep the other, and do it 6 months later. It's got to be, you got to live in it 2 of the last 5. And you can only do it once, I believe, every 2 years. So, some people believe,
came to me and they were like, my CPA said you can only do it once. And once you do it once, you can't do it ever again. And I'm like, I don't know if that's right.
No, that's definitely not accurate. You need a new CPA at that point. But I'm not a tax advisor either. So talk to a tax advisor.
Yeah.
But no, it's, a lot of people believe, hey, once you reach that threshold as a married couple, you got 500, in equity in your property, you should sell it and go buy something bigger and continue, because anything above and beyond that, at some point when you do sell it, you're going to have to pay taxes on. That's fair. But if you plan to keep the property forever anyway, it doesn't really matter. I mean, my plan, for example, the property that we're in now is to keep it. I mean, and eventually my boys will all have, a property, with a lot of equity in it. Or at some point in the future, maybe we decide to sell it and do something with it, and who knows, but I can understand that strategy to some extent, but you've also got to have a plan. And at the moment, there's not really a lot of options out there. If you do decide to sell it, what do you do? So We've talked about that a lot on my channel as well. It's great to want to capitalize on the market and take that equity, but what the hell do you do? There's just not a lot of options in this market. Let's see here. It's ATM again. Do you recommend getting real estate license if the main purpose would be for the quick insight of the MLS and maybe not focus as much as showing properties, etc.? Not really. I mean, what the hell do you need the MLS for to do that? I mean, again, these websites out there are as good as the MLS for the most part. The only difference in the MLS is that, you can see the agent remarks and some of the comments on the backside that you can't see as a consumer. Is that worth, spending the time to get a real estate license and then paying an annual fee? I pay here in Orange County about $1,200 a year to keep my license every year, right? In addition to that, every 4 years, I have to do education, 45 hours of education every 4 years. So that's something you got to factor in all of that. Do you want to deal with all of that just to have access to the back side of the MLS? I would say it's probably not worth it.
I
you see anything there?
I see that Willing let me know that the lie detector said that it was a true statement, in your honor.
There you go. That's good. I'm gonna have.
I like that I already have a nickname. I'm Bubs.
Yeah, he's gonna start showing up on your live feeds and.
I hope so. Every Monday at 6 p.m. Pacific Standard Time, Willing. I need your type of commentary in there to keep it fresh and exciting. So next Monday, actually, I'm going to plug this real quick because every Monday at 6 p.m. I'm doing 60 to 90 minutes of live Q&A on mortgage stuff. A lot of people want to hear directly from an underwriter. They want to hear nitty gritty questions. I've got a senior underwriter from UWM joining me, so you're gonna be able to ask him anything. I'm prefacing it and telling people this guy's a conventional underwriter, so don't come with VA questions or FHA questions. Good news is 80% of the loans that are being written are conventional anyhow. So that's the majority of the questions. But pop on over to Matt the Mortgage Guy on YouTube Mondays at 6:00, and we'll dive into some live Q&A.
No, good stuff. And a link to Matt's channel's in the description. Just click on his name there. It'll pop up. Danielle Mill got a new construction. Closing is set for January 18th. Does pre-approval guarantee me the money as long as I don't open up any new credit? Nervous about something going wrong before closing as far as money goes. So does a pre-approval guarantee anything, Matt?
No, it does not. And I mean, that's the scary part about some of these new construction deals. Jen talked about them. One, they might not close on January 18th. They might close 2 months later or 3 months later. Two, we're in an environment where Jen thinks it. I think Josh probably concurs that rates can and will increase over the next few months. And so a lot of things can change. Your pre-approval is based on really kind of a snapshot in time. Lender looked at it and said, right now, based on what we see, your credit, your assets, rate and everything that we've plugged in, you qualify. Now, if you've got a really high level lender that can look at it and say, listen, Danielle, like your debt to income ratio is a 31 back end, you got nothing to worry about, can kind of coach you through what to do, what not to do. You're going to be fine. But truth be told, there's some people that are like, I qualify for 560. I just got in contract at 574. I hope it works. Right. And then, little things that change could cause a hiccup down the road, unfortunately.
No, I mean, that's the thing is any change, right? I mean, you could get laid off from your job. I mean, there's a lot of things that could happen. I mean, let's give you a real life example. I told us this story similar to this the other, I don't know if it was last week or the week prior. I think it was week prior, maybe, I don't know. Hell, time is something that just erodes around me and I have no idea where it goes. But a couple weeks ago in escrow, I have the listing. A buyer comes into escrow, the pre-approved, have a conversation with the lender, blah, 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 good to go. This is the one for those of you who follow this every week, wrote a conventional offer, 10% down, tried to change it to VA part of the way through the contract, which we put the axe down and said no, because we knew there were things at the property that wouldn't go VA. But long story short, they released all the contingencies except for the loan. Well, come to find out, we had to give them a notice to perform. They wouldn't release a contingency. We canceled escrow. Come to find out, the borrower had a reduction in their hours at work and no longer qualified for the loan. So the lender had pre-approved them based on, X scenario. And because there were some circumstances changing with their occupation, it ended up affecting their ability to qualify. In fact, I was talking to Josh's team today, and they had a borrower whose credit score at the time they got pre-approved was completely fine. It dropped by 60 points. 60 points when they repulled it. A medical collection came up, completely something unaware. Credit score dropped. So that is something that can affect your ability to qualify. You can only base the pre-approval off of what's there at face value. Again, right? I mean, the information is only as good as the person that input it, but in some cases, the information, the input is accurate, but what's behind it actually changes, which could affect that ability to qualify. So,
right.
Just keep that in mind.
I was on a call, or I was listening to the sales meeting for UWM, the largest wholesale lender in the country this morning. And they talked about, like, one of the things they focused on is speed and ease. They want to do loans fast. They want to make it easy for consumers. They do the speed because time kills deals, right? Oh, lights are on.
Lights are on, baby.
And so having a deal that's not closing for 2 months, having a deal that's closing, the more time you have for things to change, the more risk you're at. And so, yeah, I'm just hearing those stories, man, sucks. I feel
it does. It sucks for everybody involved, because there's a lot of time, effort, energy put into that, emotion, right? Which nobody really factors in, and then comes out like, that sucks. Willing 7. I want you to read his comment here. Here we go. We'll put it on the screen.
Okay. MTMG. My tango, me grango. I shall sub ASAP, bubs. But remember, the werewolf is the best at what he does. And what he does isn't very nice. Werewolf. P.S. I would like to be the comb that brushes hair.
Oh, it's so good. It's probably somebody I know too. That's the best part.
My tango, me grango. Whatever the hell
so
that
good.
means, it's fucking
That's
awesome.
So good. It's so good.
People wonder why we do these things for an hour and a half or 2 hours. This is pure entertainment.
I know, it's hilarious. My wife thinks I just sit here and screw off for 2 hours. She doesn't know that there's any value provided. She thinks I just read comments like that.
I come home and tell my kids about the super chats. They think I'm the coolest dad in town.
Oh yeah,
super
for
chats
sure.
on YouTube.
So Cam 3087 says I got pre-approved for 3.3 at the beginning of escrow. Can it change by the time I get to the closing table? So you get a rate, you're quoted a rate per se. You talk about the locking a loan. Talk about that question there, Matt.
Sure. Yeah. I mean, the thing about it is, depending on who you're working with and depending on if they locked the loan, it's not going to change if it's locked. Look at the top right of that loan estimate or closing disclosure, whichever document, depending on where you're at in the process. At the beginning, you'll get a loan estimate. As you progress, it'll change into a closing disclosure. But up in the top right, it's going to say locked, yes or no. One of them is going to be checked. And then if it's checked yes, it's going to say locked until 12/6/2021. The only way it would change is, and we've had this happen on some of our refinance deals, probably less common on a purchase deal. The value comes in different, right? And so, you thought it was worth $975. The appraisal comes in at $855. We went from a 57% LTV to a 70% LTV. And now, pricing is going to be slightly more expensive. So long story short, if you're locked, it shouldn't change. But if value changes, if for whatever reason it's not closing on time and that's due to, the borrower perhaps, and they've got to, pay for a lock extension, usually that rate stays the same, but the cost for that rate increases. It's usually that, and not like you're going to see 3.5 on the next one, but just make sure that you're locked. Especially because today, Jeb, I will tell you that most lenders would shy away from telling people this because it's always supposed to be sun shining. 72 basis points. Today. The red candle that we saw today, it was friggin' gnarly.
Yeah, no, I mean, that's stuff. And you need to have a pro that understands how, rates work. Again, I mean, we back on call centers, but chances are the person working that call center has no idea what's going on. Experience matters in all aspects of this business. With that being said, how long out can you lock a rate, Matt?
A lot of lenders are doing 6-month locks. I've heard of some lenders doing a year lock. I don't think it makes a lot of sense to do longer than maybe 60 or 90 days, because like the things that I've seen on these super long locks is they're going to add a 0.5 point to the interest rate. And so, you're going to lock now for something that's going to close in March. And you're like, okay, I'm cool. I'm locked for 6 months. One, when you're that far out, like Jen pointed out earlier, the builder might delay closing by 2 months because in January they realize, they're behind schedule on the 47 homes they're building. You're locked until the end of March, and you paid a premium to lock this thing and took this 3.75% interest rate. Rates might be lower, and then you're going to be in a position where you got to relock it. I personally, we're doing a lot more new build stuff. I think stuff's getting built in California. It feels like it. I'm not locking people longer than 90 days. The locks are just too expensive.
No, good stuff. I mean, that's what people need to know. Does bank loan for a lot? Yeah. So like your typical lender, like most of your mortgage brokers out there aren't going to do lot loans, like land loans in these cases, for a lot. Do you do land loans, Matt?
I refer them all to U.S. Bank. U.S. Bank likes those loans. They want them, so send them there.
No, agreed. Yeah. I mean, most brokers out there aren't doing those. You might be able to go to your typical bank, might do that sort of thing, but it's going to be a little bit more difficult to find a lender that do those. Same thing with manufactured or mobile or whatever you want to refer to as homes on wheels or foundations at this point that, there's only a couple banks out there that do them. They're just more difficult. Typically you're going to pay a little bit higher interest rate for it. Just know what you're getting into when you're going that direction. Let's see here. Gabrielle, did we already talk about price predictions for 2022? Same, up, or down? We haven't really talked about it, but I mean, my thoughts are you're going to see, what I would like to see and what I think you're going to see are two entirely different things. I think you're going to see a strong housing market, strong for sellers. I think it's going to be tough for buyers. I think inventory is going to be a problem for the majority of the year. I mean, I think in the spring, you're going to have more homes come on the market. Depending on what happens with rates there, I don't think rates are going to go too far. I can see them going up a little bit, but probably not over 3.75%, somewhere in that ballpark at the worst case. I think that continues to drive prices. I think, inventory is so depleted in a lot of markets that in order for it to increase to a level to slow things, that's a lot of property. And I just don't think you're going to see it happen. So I think you're going to see home prices higher next year this time than they are at the moment. Now that's going to depend on the market you're in, right? I talk about this all the time. It's local, right? Here in Southern California, my market is going to be different than your market if you're in, Canton, Ohio. It's not the same market. So you got to know what's happening in your market in order to be able to decide, what you're going to do in that time frame, if you will. So there are most of the, again, I talked about it yesterday in a video, most of the major associations are predicting some sort of increase in home prices. It ranges anywhere between 2% to, I got Goldman Sachs saying 16%, Zillow's at 12%, Fannie Mae's at 7%, CoreLogic's at 2%. So you've got it all over across the board. But what you didn't hear there is a 15, 10, 20% decline, which is what a lot of people are expecting. Or
Correct.
Not a lot of people. There's a lot
They're
of people
wishing.
hopeful of that happening, right? The Mortgage Bankers Association at the moment is the only association that I'm aware of that is expecting any sort of decline, and that's 2.5% from what they're expecting to be 362 median home price in January. So they're expecting a pullback to 352 by next December. But what I didn't do in that video is I didn't continue to go what their predictions were for the years prior to that. What I didn't mention, if you look at that video, is I only mentioned they're expecting a decline by 2.5% next December. But if you followed into 2023, 2024, 2025, they're actually expecting the market to start appreciating again. It was only a small dip by next December. So, that's a whole different conversation in itself. At the end of the day, we have no idea.
Who was that? Mortgage Bankers Association?
What's that? The MBA.
Who was that?
Yeah. Mortgage bankers.
Yeah.
Which if you historically go back and look at their predictions, they're all online. You can find them pretty easily. They haven't been very accurate to begin with. In fact, nobody's really been, any of these major publications. CoreLogic hasn't been accurate. Mortgage Bankers Association hasn't been accurate. Nobody predicted what we saw this past year with regards to huge increases. And, Lawrence Yun, chief economist, National Association of Realtors, actually thinks you're going to see less home sales next year, right? You're not going to see as many homes sell as we did this prior year, but he also attributes that to inventory. It's not like, there's just going to be significantly less demand. It's going to be more of an inventory problem, even though inventory is going to increase, just not going to increase to a level that's going to slow the market. So,
right. Yeah. And that's the thing too, is like, supply versus demand is the really easy way to look at it. It's just like, if we continue to see not a lot of supply and a lot of demand, home prices have nowhere to go but up. And, if mortgage rates go up, everybody's like, well, that's going to tame prices. Well, if they go up 0.5%, there's still going to be tons and tons of willing and able buyers that are going to feed that demand side. And if supply is limited and, everybody who's looking at it objectively says it's going to be limited, then we continue to see, price increases. I hope for the 111 buyers, last I checked, that I have pre-approved that are looking and trying to, buy a home, I hope that we're 5 or 6% appreciation and not like the crazy 16%.
And that's something I didn't mention, right? My hopes and my expectations are too different. I would love to see 3-4% appreciation, right? And a lot of those people that purchase now or getting ready to purchase, like, no, dude, we want to see gangbuster appreciation. No, you don't. Like, you want to see more gradual, stable appreciation because it's sustainable at that point, right? It's like a stock going, through the moon. At some point you're going to see some sort of pullback, right? There's got to be a pullback in order for that to continue to go higher, right? Tesla didn't just go from, however much a share to what it's trading at now. There were a lot of pullbacks, a lot of volatility in getting there, right? Versus the McDonald's, the Coca-Colas of the world, right? That have just gradually gone up over time. You don't see these huge spikes. You don't see these big moves. You just see constant movement over time. You see some pullback, you see some appreciation, but at the end of the day, it's less volatility, right? And less volatility to me means more stability, right? But again, who am I? Just have a YouTube channel. What would you recommend for proper college schooling for being a landlord and real estate driven business? I don't even know where to go with that question. there's a lot of things that college can't teach you. And real estate is one of those. Whether you're being a landlord and or actually selling real estate, part of that business is actually being in the trenches. I mean, what a lot of people don't know is getting a real estate license, you actually learn zero about selling real estate.
Yeah.
Right? It is completely counterintuitive to everything you think you're getting involved
What
in.
are the questions about like the measurements and
It's like, I mean, it has everything to do with like, the legality of real estate, like easements and functional obsolescence and all of these things that you're like, I've never encountered that in 20 years of selling. Like what? Like what does that any of that mean? And that's really, you need to be out there and be in the trenches. Same thing with being a landlord. There's nothing that's going to teach you. It's dealing with people, right? If you want to know how to do real estate, you want to know how to be a landlord, you want to know how to be successful in any business, learn how to deal with people, right? Communication, dealing with problems, problem solving. That's the schooling you need.
My advice I would give here, if you want to become a landlord, you want to learn about being a landlord, go work for a property management company for a year. Find one that's great, has a good reputation, and go work for them. And if you want to learn about, real estate driven business, there's plenty of great real estate teams. Like you got to be in it, right? And so I 100% agree with you, Jeb, where this isn't something where you sit in a college class and listen to a professor, preach about it. You go out in the real world and see it, touch it, feel it, and get in there.
Oh, Willing's going to have he's going to have a comment about that one.
he already
see it, touch it, feel it. Willing, what are you thinking there? He already thinks that your cup needs to be refilled over there.
I put some water in there with the rest of the coffee, so it's watered down coffee now.
Oh yeah, it's not going to work. Not going to work. Let's see here. We don't really have a lot. So somebody asked a moment ago, does it require a higher down payment for a lot loan? Yes, typically those you're not going to be able to do an FHA loan or 5% down in most cases. I think you're going to need some sort of down payment. Again, I don't. Even when I was doing mortgage brokering, it was over 10 years, but it's been about 10 years since the last time I did anything. Those loans require a larger down payment.
Yep. I just pulled up the email that I forwarded to somebody. U.S. Bank originator sent me kind of like the Cliff Note guidelines for the lot loan product. So I guess while we're here, I'll kind of rattle some of these off. 20% down. If the lot is greater than 5 acres, you got to put 35 to 50% down. Max is 10 acres. Minimum loan is 75,000. Max is 750,000. 720 minimum FICO. No structures on the parcel. No bankruptcy in the last 10 years. This product they have is a 3-1 ARM, and it's like a 4.75 rate. So that kind of gives you an idea of, bigger down payment, higher interest rate. Credit requirements are a little bit tougher, 720 plus, can't have BK. And so, people that are like, oh, hey, it's hard to find a house in this market, so I'm just going to go buy a lot. I'm going to build on it. And you're like, what do you have? Well, I got $17,000 and I'm looking in, the Hollywood Hills. Best of luck to you.
That's good. Jennifer says, do you have any experience with no credit score loans at all, Matt?
I don't really. There's lenders as a broker that we can take these to and have them manually underwritten. I used to partner with some real estate agents who had connections to Dave Ramsey. And so Dave Ramsey's like, cut up all your credit cards, ditch your credit score. In the world of mortgage, not having a credit score hurts you a lot because the lenders basically go, oh, we'll manually underwrite you. No problem. We can use this and this and that. But then they do your pricing based off of a 580 credit score. So you're paying an extra 1.5% in interest every year. You're paying an extra $7,000 in interest. If it was me, would take the huge gamble of opening a couple credit lines, get your credit score to report, have a 710, get a much better looking mortgage. Just because you have the credit lines open doesn't mean you have to max them out and go crazy, right? So I would tell most people I'd prefer for you to wait, right? Like unless you have to buy right now, do what it takes to get a credit score to populate and buy 3 to 6 months from now. Most people can get a credit score to populate in 3 months.
No, agreed. I was just grabbing some information from Matt here. So what I'm going to do is I'm going to throw Matt's YouTube channel into this chat. You guys can grab that one there. And I'm
Sweet.
also going to do the same for Miss Beeston, who was on here earlier. If you guys didn't know, Jennifer was on the channel earlier. You can go back and watch the first almost hour with Jennifer on here. She helped us out with some questions, so I'm going to throw her on there as well. Oh, Eddie. Sorry, buddy. Edie, maybe Eddie. Not sure. Confused though. Matt. Matt. Anything you want to say, my friend? What do you want to get off your chest tonight? What's bothering you? We got a couple minutes to.
You know what's bothering me
out there.
I'll tell you what's bothering me.
Oh boy, here we go.
It's bothered me for a long time, but like people are making bad decisions. People are so easily sold a bag of goods. Like I get people that tell me like, oh, I'm going with Quicken. They've got the lowest rate I've seen. And I'm like, please let me save you. Send me the loan estimate they sent you. They send me the 2.375 interest rate that the Quicken showed them for the 20-year loan they're looking at. And it's got 2.5 points. You know, it cost them $8,700 in points. And I'm like, I've got that rate as well. I'm just not an asshole that's trying to put you in a loan where it's going to take you 144 months to recoup that extra cost. Because if you take
12
this
years
rate,
for anybody that was wondering,
144
months.
And that's why, like,
math guy, guys, I did that in my head.
Crushed it, brother. This is what I need people to hear. If you don't get value in anything else, I tell you, the best interest rate does not equal the best loan. There's a way to structure a loan based on a bunch of different factors. But what happens when you have companies right now, especially, they've got a ton of staff. They ramped up their staff because a zillion refinances were done in the last 18 months. So they've got all these staff sitting around. They're like, you know what? Just call everyone in America and get them to refinance. It doesn't matter if it benefits them or not. Just call. So they're trying to sell somebody on a rate with a humongous cost associated with it. I looked at this one for this client where it's like $36 difference between 2.375 and 2.75, but it's a $4,500 or $4,800 cost difference. Now, you don't do that. You don't spend $4,800 of today's dollars to save $36 a month because it's going to take, like, Jeb's quick math, 12 years to recoup it. And in 12 years from now, $36 is a loaf of bread. Right. If we continue to print money like we're printing money now. So that's another rant. I could probably go another 10 minutes on that, on inflation and the money printing. But that's the thing, is like, you need to make sure that you talk to a professional that helps you properly structure a mortgage. The best rate, lowest rate, is not the best loan.
There you go. And Jennifer Beeston, our guest from earlier, as I mentioned, just threw some knowledge in there for Jennifer Lego's question earlier about getting a loan without credit. So, if you have questions about that, reach out to Jennifer. Again, her contact information is in there in the chat. You can find it. There's not, I don't really have anything I need to get off my chest here, man. Other than people need to hit that thumbs down while you still can. It's going to disappear here soon, people.
If you're
not willing to like it, hit the thumbs down. Let's see what you can do.
If you're disappointed in Matt the Mortgage Guy,
a lot of you guys didn't like my mustache and really, really were unhappy with it. And, I shaped it off. You guys don't even appreciate it. Here we are. I'm growing beard, man. I'm going beard. We're going to see how long I can do it. The most I've ever lasted is about 4 weeks. So, I'm feeling like I can go a couple months.
Yeah, you can do it, bro. You can go all the way to the new year before you shave. My comment on one of your old videos or one of your videos when you had the stash was, I thought you quit real estate and joined the highway patrol.
Dude, somebody on here said it looked like it would make a good broom. It's just like the bristles.
Nothing better than internet comments.
Oh, absolutely. It's just fantastic. If only they hurt my feelings, it would be so much better.
Speaking of internet comments, this guy's an absolute gem.
I'm much obliged to all of you. Simply glorious. You too, Miss Lego World. million dreams. When in doubt, process loans. When stressed, process loans. Do it for Werewolf and Luis and Mortgage. Good night. It's like a bedtime story. I might read that to my kids tonight.
This guy's got to be a future guest.
Oh,
Guy or gal? I shouldn't assume.
I'm going guy. I'm going guy. Just the what the vibes are guy vibes, but maybe I'm wrong. But Jennifer also throwing out some knowledge here. Do what makes the wife happy. That's typically why the mustache gets shaved off too, just because it's doesn't go very far at home. So anyway, if you guys are watching, hit the thumbs up, subscribe, go check out Matt's channel, get him to 10,000 subscribers. He's really close. Where you at, Matt?
9,930 something.
Guys, there's 152 of you on here. I guarantee you're not all on his channel.
I know. We can get there. We can get there by tomorrow.
Right now. That would be awesome. Like throw a live count on there. Can you throw your live counter on the screen and we'll just watch it go up? See if these people can actually get you to 10,000.
Let me see.
Can they commit to that?
I don't know. I don't know if they're that dedicated to you. I mean, you stay on a live stream for 2 hours and 3 minutes. That's the least your audience can do for you is a little bit of
love. Man. They don't care about me, bro. They're only here for the antics.
Analytics.
No, you got to go to studio.
Oh, I'm in there. 99.25.
And then go to live count underneath it. And then you have to hit view live count. We only got 148. We're dwindling here, people.
Dude, I just went up 2. I just got 2 new subscribers.
Oh, look at that. 2 new people. Anyway, people, do him a favor. Go hit his channel up. Get him there.
Look at that. Share my screen. Why did it go back to 99.25?
They just deleted off, bro.
That's messed up.
Yeah, they said they played a game with you. They were like, watch this. Nope. We're out. Get it.
Oh, there we go. Look, 99.27.
There you go. Look at this. It's like a game. We can play a game here.
Yeah.
Let's see it go up.
If we get to 99.30, I'll drink some more coffee water.
Yeah, there you go. Up, down 1. There's people just messing with me now, bro.
Everybody's look at back to 99.25. This
I know this is Werewolf over there just messing with you, like going up and down. Too good. All right. Too funny. Anyway.
Good times. Thanks for having me, man. This was fun.
All right, brother. Till next time, people. Appreciate you guys watching. Thanks for the support. As always, next Wednesday we'll be back here. Until then, adios, my friends.